Hello friends, welcome back to my channel. Today we are discussing a very important topic, that is stress testing. The whole week we had been listening about this term. Even we had seen market, especially the mid cap and the small cap stocks correcting by a sizable amount, 4 to 5%, because of this test. So what are these tests about? Why they are being conducted? Why SEBI chairman has been warning about it, and why markets are feeling so jittery. So we'll learn everything about it. If you want to know the complete picture, the complete topic, please stick to the video up to the end, and I hope it will be very beneficial for you. So let's get started. So stress testing. Imagine needing money from your mutual fund but being unable to access it quickly. A stress test helps prevent this scenario by accessing a fund's ability to handle a large number of investors withdrawing the money at once. So buckle up and get ready. So let us see what will happen. First we'll see what is the stress testing. What is meant by stress testing? The stress testing is a form of deliberately intense or thorough testing used to determine the stability of a given system, critical infrastructure or entity. It involves testing beyond normal operational capacity, often to a breaking point, in order to observe the result. So we just prepare and check our systems for that doomsday. So we'll put it into a very unrealistic scenario, though possible, because normally that kind of situation may or may not come. But if that comes, what will be the consequences, how the system will behave, and the stress test check this kind of scenario. So we have learned the basic meaning of stress testing. Now let's go to our next. Are all funds are under scanner? So normally the SEBI has been worried about mid cap and small cap. So only mid cap and small cap funds are under the purview of this stress testing. What are these funds? Funds which allocate a minimum of 65% of their assets to small caps are classified as small cap funds. The remaining 35% can potentially in cash or in large cap stock can be parked. So the same regime applies to mid cap stocks, that the mid cap stocks, they need to have at least 65% of their exposure in mid cap stocks, and the rest they can utilize, distribute between the large cap and the small caps. So recently the euphoria in stock markets are growing, and after the run-up of the main index funds, the focus of the investors or traders have been shifted to these small cap and large cap stocks. These inflows into these funds have surged over the past years, leading to a sharp increase in the stock prices of the small cap and mid cap funds. We have seen an increase of up to 300 and 400% in the stock prices of these stocks. So what is the stress testing of mutual funds? So this stress testing will check two things mainly. Selling speed. How quickly can the fund manager sell some of the stocks if the investors suddenly want to take their money back? So like if lot of redemption requests are received by a fund, suppose there is a panic in the market and the investors, they want to take out their money, how quickly the first fund manager can sell their stocks and return the money to the investors. Price impact. Will selling these stocks quickly will bring down their prices significantly also. Suppose you have seen that your NAV of the stock is suppose rupees 100, and suddenly something happened in the market, and the fund manager started receiving lot of redemption requests. So what will do? He will have to sell the holdings, right? So once he goes to the market to sell the holding, and there will be a lot of supply of the stocks in the market. So naturally, the prices of the stocks or the whole holding stocks of that mutual fund will come down. And with that, the NAV of the fund will also come down. And as this delay will increase, the more the NAV will keep on coming down, and it will be it will cause a spiraling of effect. The more NAV will fall down, more investors will start feeling jittery. There will be more redemption requests. Again, the mutual fund manager will have to go to the market to sell their holding to cater to the redemption request. So this can be a vicious cycle which may collapse that fund and even collapse the whole mutual fund market also. So SEBI was nudging AMFI, and even the SEBI chairman said in AMFI meeting only that there is a froth building up in your especially mutual mid cap and small cap mutual funds, and we need to take care of that. And if you will see the size of that, according to the data from AMFI, India has 27 small cap funds and 29 mid cap funds. They are managing 2.4 trillion rupees, that is $28.93 billion, and 2.9 trillion rupees respectively. So we'll see small caps, they are having 2.4 trillion rupees, and mid caps, they are having 2.9 trillion rupees. So the money we are discussing about is a fairly large amount, and mind you, these are the money from the common people, from the investors. So SEBI is rightfully worried. What is the purpose of this exercise? So according to SEBI, in the context of the froth building up in mid cap and small cap segments and continuous inflows in small and mid cap fund schemes, mutual fund houses should frame a policy. And through these tests, investors will benefit from knowing how many days the funds would need to exit their underlying portfolio in the event of an unfavorable market condition. This test also aims to protect investors, ensure that the fund has enough liquid investment to handle unexpected redemptions, and also keep funds prepared. So it is kind of showing mirror to the fund managers that in case something goes wrong, awfully wrong, then what will you do? And if you'll check the current cash positions of the most of the mid cap and small cap funds, they are not sitting at a very good amount of cash. So if some large inflow of redemption requests come, it will the fund managers will find themselves in a very dangerous situation, and that will affect the mutual fund industry, and moreover the trust of the investors in that in industry, which is of I will say immense value, because this trust has been built over a long period of time. And if something goes wrong, like we have seen in the UTI fiasco in 1990s, this takes a lot of time for the investors to come back and the industry to stand on its feet once again. So timely action should be should have been the mantra for this, and I think SEBI is on the right path. So we'll see the results now. So most of the mutual funds, I'll say all the mutual fund managing small cap and mid cap have published their result, because the deadline was 15th March only. So if you'll see, SBI mutual fund can sell 25% of their small cap portfolio in 30 days and 25% of their mid cap portfolio in 12 days. So these are the results. You can just go through them. Will not elaborate it further, but the results are not very encouraging, because you'll see all these funds they are going to take more than 5 days period. And if we are just talking about the 25%, some fund houses are even asking for 30 days time to sell their 25% or 30% of the portfolio. So and you can imagine in that scenario what will happen to the NAV of a fund if the fund is taking 50% 30 days time or 15 days time to liquidate their portfolio. So you'll not be getting your money back. I think investors will be in a serious trouble if this is going to are going to be the scenario. So these tests are also a kind of realization. The fund managers should realize that these, if this is the scenario, are they doing justice to their investors? Anyways, let's move forward. So how should I interpret the results of this stress test? So with the previous information, the previous slide must have made you worried, because the funds are taking a lot of time. So if you will see and we'll try to interpret the results, the market was very nervous. The quant mutual fund, they were the first mutual funds to come up with the results, and because of this, and markets were expecting increased amount of scrutiny from the regulators, mid-cap fund index has fallen by 4.8%, and small cap also they have fallen by 5.49%. So but mutual fund investors should not just consider the result of stress test alone and make redemption decisions. One should consider other things like risk appetite, the beta margin, the investment horizon, and the goal before making any investment and redemption decisions. So only these tests should not influence your redemption or investment decision in any mutual funds. Mind you that this is only a hypothetical situation, and this was only a hypothetical situation, and this will not be the only time these funds have to conduct these tests. Actually, from now on, the mutual fund houses have been asked to publish the stress test results on their respective website after every 15 days. So once these results stabilizes, and after I'll say 2 to 3 months, we can when we will have a lot of data, we'll be able to read through those results, and I think that time the data can be of value to the investors. But still, only this stress test results should not influence your decision to enter or exit into any mutual funds. So what is the conclusion now? So we can say that a delay in existing holdings of such stocks could defer the return of funds to investors. So we have seen that the longer the delay, the more will be the impact on the return of the investors, as the NAVs may be affected. Fund houses are also likely to they are needing between less than a day and 30 days to exit a quarter of their small cap portfolio, and a maximum of 70 days to exit a quarter of their mid cap portfolio. That is a fairly large amount of time. Mutual fund investors should not consider the result of the stress test alone and make redemption decisions. And most important, friends, keep a tab on your greed. The most important thing about this, about any kind of investing, is you have to allocate and build up your portfolio with planning and keeping your goal, your risk appetite, your age, your responsibility in mind. So if you are able to control your greed, and you are able to allocate your funds as per your objectives, as per your goals, I think then it is not going to be a big problem. So thank you, friends. Thanks for joining us on Wealth Wisdom Hub. We hope this video gave you a solid understanding of mutual fund stress test. Remember, stress tests are just one factor to consider when choosing a fund. Make sure to justify and diversify your portfolio and consider your risk tolerance. For more personalized video, don't hesitate to consult financial advisor. If you found this video helpful, be sure to like and subscribe for more wealth building wisdom videos on our channel, and do not forget to share this video with anyone who might benefit from the learning about stress tests. So friends, thank you for watching. See you next time. Bye.